Hi everybody, welcome back to this channel and welcome to this new video. I hope you're doing well, and today we're going to discuss what has been the big moves in January and how our portfolio has been doing. So in overall, I would say that January has been an inactive month. No buys, no sales. I'm recording this on the 2nd of February. Yesterday we had some results about the Fed, etc. And basically inflation is going down, so good news for the market, less fear, but still valuation overall are kind of expensive, so I'm not so bullish for the markets overall, especially US markets. So that's why I will be very cautious about valuation regarding what we buy during this year. So I'm looking at our results right now, and in January our portfolio has increased a bit more than 11% in 1 month. That's unconventional, and don't expect this to happen again in 2023. It's been a good month, etc. But I would not be surprised at all if in February we lose the all to back to 3 or 4%, because I think that most hype stocks, loved stocks, hot stocks are getting more momentum right now. I don't know why, but the speculation is still here, definitely here. We see some Tesla moves going up again, some meme stocks going up again. So yeah, don't be surprised if we lose it all in the next few months, and if we don't increase much more than this in the future 6 months, 1 year, etc. So that has been a very good month for us, especially since we have bought beaten down stocks. But yeah, I'm not worried because that's life of markets, but I'm not too much excited for the future because we've had so much gains at the beginning of the year. If we look at our table, our portfolio, I would argue that Pool Corp is finally moving the good way, the good direction. I've been buying this stock personally for months, and it's good to see that it's still not dead. Right now, as I speak, all our holdings are positive, are green. That's too bad because I wanted to buy more Google, so I hope they miss on earnings. So the outlook is pessimistic for the stock, and I can buy it more cheaply. Same for Oxy. I hope the oil price drops temporarily so I can buy more Oxy at a cheaper price. So Pool is getting more momentum. Alibaba is still on full force, and with China reopening, domestic consumption growing in China, I suspect Alibaba will be a good pick for 2023. It's up more than 30% in our portfolio, and it can go up more. We will have earnings in the next few days or weeks. Another thing that I see now is that some home builders like NVR or LGI Homes are going up again. The sentiment is shifting and the earnings are not that bad. So I suspect that some companies in a similar industry like Ally Financial or Credit Acceptance, maybe the sentiment will shift again and prices will go up again. Regarding Credit Acceptance, the stock is good, the company is good, but Charlie Munger said it was not a win-win-win situation because some people say the company takes advantage of the small lenders, subprime lenders. So yeah, I'm still studying this. I've not bought any in my personal portfolio. I don't have any stocks. So yeah, that's basically what happened in January. Basically, stocks have gone up. So good for you, I imagine. And yeah, still cautious about the markets, and I would not be worried if it drops significantly in the next few months. Maybe now it's a good time to talk about Meta's earnings that happened yesterday. Basically, now as I record this, the pre-market stock price of Meta has gone up plus 18%. Great news, the sentiment is shifting, and basically all the worries that we've had with Meta platforms and Zuckerberg in 2022, all these problems, etc., all of this is changing. All what Wall Street wanted and wanted Meta to implement and to say, etc., Zuckerberg has told them everything they wanted. They will reduce costs significantly, improve Reels monetization, increase buyback program, improve free cash flow, etc. And 2023 will be the year of efficiency for Meta platforms. So yeah, basically all the Meta investors were worried about costs, too much employees and competition, TikTok, Apple privacy issues. My guess was that all these issues were temporary, and because of its excellent management, Meta could improve all these situations. So yeah, that's a good beginning of 2023. Zuckerberg addresses these issues and will invest massively in AI, in Reels monetization, restructuring of the team, separation of middle management, all of these things that will reduce costs, improve free cash flow, improve revenue. Even if the earnings per share have missed yesterday, the buyback program was really enticing. I think in the past quarter they bought back $6 or $7 billion worth of stock, so more than 100% of their free cash flow. That means that they are getting big on buybacks with the current valuation, which is very cheap. So yeah, good news for our portfolio, and I'm looking forward to the earnings of Apple, Amazon, and Alphabet. We will see. We will see if the recession is here, because we've been hearing for 1 year that the recession will be here, will happen. Maybe in Europe that's near term, but in the US I still don't know how things will go. Even if the earnings of our holdings are bad for 1 or 2 quarters, I don't really mind, because I plan to hold them for at least 2, 3, or 4 years. So I'm not very worried about bad performance of semiconductors or home builders, because that's a cyclical industry and I hold them for the long term. If you have this owner mentality, you are not worried about the next few quarters. We plan in long term, we plan in years. I think that's all I wanted to share for the January performance. In terms of reading, last video I told you about Copart's book, Jump to Gold, which I finished. It was a very good book and small book. I love the management CEO. I learned how fabulous this business is. Too bad it's too expensive for me. Definitely a good business, and I suspect it will still remain a good business 10 years from now. Their shift in the internet online auction for selling cars was amazing. Another book that I've read recently is the biography of Ed Thorpe, and I didn't know much about this investor. I'm amazed at how good a genius he is, and basically at every game that he has played in life, he had mastered the game, calculating the odds, made experiments about how to beat the market, beat the dealer. Basically, he hacked the blackjack, he hacked the roulette, and he hacked the financial markets. He saw that Bernie Madoff was a fraud, was a scam in 1991, like more than 15 years before the collapse of the Ponzi scheme. He has averaged 20% of returns in the stock market in his partnership for a bit more than 10 years, 15 years, something like this. And that's definitely a guy that it's good to copy. It's good to clone what he has done. I don't think and I'm sure I'm not as smart as he is, but if I can be 1% as good as he is, that's great news for me, and I would be very pleased with this. So yeah, very good book. I highly recommend it. It was written by Ed Thorpe himself. The next book I just finished this morning is called Too Small to Fail. Basically, that's why and how some small countries can perform better. For example, the healthcare system in Singapore, why is it better than most healthcare systems in the world, the US, UK, etc.? Or, for example, why has Finland the best education in the world? Or why is Switzerland so powerful and so small and so powerful? Most of these countries basically are aware that they are very small. So they are aware of their vulnerability, and that's why they are willing to change so easily and adapt to their own situations. They know that every big country can invade and conquer their territory, so they have to adapt and have a strategy of trade and specific abilities, so they are very important to other countries. I finished it this morning, and now this afternoon I will start Constellation Software shareholders letters. I've been told many times that this business, Constellation Software, was very good. I don't know much what they do. I just know they buy other businesses and they are operating very good and they have beautiful shareholder returns. Yeah, so I will tell you about this. If this is a good business, I don't think I will buy it now at current prices, but definitely a business that I'm willing to add on the watch list if I like it, if I understand it, and if I think it has good prospects in future years. And that's it for this first month of 2023. I hope you like the video. Please share it, like, comment. So far we have 9 subscribers, so that's a big hit, huge buzz. Yeah, looking forward to seeing what the results are for the next part of the year. I will see you in a few weeks for our February review, and I wish you a great day. Bye bye.